What's going on, everyone? So today was a very important and interesting day. Very, very eventful. So the dollar went parabolic and the Nasdaq made new all-time highs. All right, so very quickly, what I want to do at the very beginning of the video is just explain what all of these things mean. Okay, so the dollar. All right, the dollar clearly had two very, very strong days. The first day yesterday was we crossed out of this trend line here, which was acting as resistance. And then today we crossed over both of these resistance levels that we've been monitoring for quite some time. Okay, now we're trading back above these two levels. What this means is that the scares that people had for inflation are gone. Okay, so the Fed basically explained yesterday that inflation is higher than expected, but they said that they won't be increasing rates until 2023. All right. So which means that people are more comfortable with like the fact that there won't be any inflation for a long time. Okay. So if they said, yeah, you know, there's like inflation is at a much higher level than we expected currently, we're going to look to increase interest rates in 2022. They didn't do that. They said, look, it's not a huge deal right now. We're going to increase rates in 2023, which is why the dollar showed strength today, because inflation is not a current worry, as many people thought that it was. All right. So the dollar was very strong. Okay. So what does that mean for the banking sector? The banking sector, let me show you. All right, here we go. This is the banking sector, the XLF, which is the bank ETF. Clearly had a huge red day. The reason for this is because banks, they make money when interest rates go up. Okay, so if the Fed said, hey, you know, we're going to keep interest rates where they are, it's not going to be an issue until 2023, all the way over here, you know, so don't even worry about it. So that takes money out of banks' pockets because they want interest rates to go up. They'll get more money from giving out their loans. Banks will end up making more money. But the fact that inflation is not currently an issue and interest rates will not be going up anytime soon, according to the Fed, banks took a hit because it hurts their bottom line. Banks need high interest rates to make more money, okay? So obviously that's the reason why the IWM also had a huge red day, because like there's a lot of banks in the IWM ETF, okay? The Russell 2000. But on the other hand, the Nasdaq made new all-time highs. So why did the Nasdaq make new all-time highs? Say, for example, I'm a $1 trillion company, all right? And operating expenses are $100 billion a year. Interest rates, hypothetically, are 1%. If I get news telling me that, hey, you know, interest rates won't be going up for another 2 years, what that means is that my $100 billion in operating costs is only going to be run at a 1% interest rate that I have to pay, right? If that 1% increased any number, right, that would mean that there's more money coming out of my pocket. I would have to pay more money in interest on the large operating costs or whatever else that I need to pay for, right? But the fact that interest rates are not going up, it's a good thing for the operating costs of tech stocks, because these companies don't need to worry about having to pay more interest for their loans and everything. So that's why the Nasdaq had a very strong rally, because interest rates, there's no scare of interest rates going up anytime soon. So that's a very, very good sign for the tech sector. That's also a very good sign for the SPY as well. But, you know, in the short term, obviously, that's why the IWM took a hit. But overall, if we had very, very good news for the Nasdaq, eventually, once, you know, people take profits and we find support on the IWM, this will eventually also bounce as well. And the market seems pretty bullish in the short term, only because interest rate scares aren't there currently. All right, so that was basically a quick little rundown of the explanation between the SPY, QQQ, IWM, and the dollar. And now let me just go over the daily charts of all of these different ETFs. So here's a chart of the SPY zoomed out. We're currently at very strong trend line support on the SPY. So I started this trend line back at the bottom of March 2020, and we have one touch there, right? Two touch, three touch, and now we can see that we're currently sitting at it once more. Oh, sorry. Yeah, so this is that trend line. So we bounced off of that as well, and we're still trading above it. And I was saying that that level was basically here, and then the next level of support was going to be 418.25. So the fact that we're still trading above that same uptrend line since the March 2020 bottoms is very, very important. Even though the banking sector and, crude oil, as well as, all of the commodities, really look at gold, huge red day, right? SLV, huge red day. SBSW is a combination of gold, silver, and platinum, huge red day. So, the fact that the SPY still held up above all of those, this level of support, even though all of these other sectors and commodities, etc., had a huge red day, it's a bullish sign. Also, the fact that we're very oversold on the MACD at support, also a very bullish sign. The B bands, we're trading still above the 20 exponential moving average, which is also another good sign. But the key level of resistance now for the SPY is going to be the top level of this same trend line, which is approximately, tomorrow is going to be 422.50. And 422.50 is going to be an important level of resistance. After that, 422.82. And if we can reclaim these levels and start trading above, that will be a very good sign. Because as you can see, the SPY is not trading at new all-time highs, but the Nasdaq essentially is. So if we can, if the Nasdaq continues, then the SPY will eventually catch up, and that should be very good news for the SPY. All right, so now the Nasdaq. This is super, super bullish on the Nasdaq. So, so look, we crossed down below on the MACD, which is a bearish sign. So when we cross above, so when the blue line is below and we cross above, that's a bullish sign. It means that momentum is trading upward. When we cross below, that is a bearish sign, which means that momentum is going down. Okay? But the fact that we see this divergence here, and we've crossed down below on the MACD, but we made new highs on the Qs, that's a very ridiculous, very, very strong sign for the tech sector. That it's just honestly remarkable. So yeah, the next level of support that really needs to hold for the Qs is going to be 344.50. Sorry, excuse me. 344.50 needs to hold on the Qs. And then basically we just need to see if we can continue on higher. I was also saying that, the B bands pointed upward in this way is very, very important as well. Like you can also see there's definitely a flag being formed here. Let's see if we can continue on higher and break out. But yeah, the Nasdaq overall looks very, very strong. The dollar basically, falling in that way while the Nasdaq going up in this way is ridiculous. I've never really seen anything like it. But yeah, that's the Nasdaq for today. IWM. So obviously I explained how the XLF and the banking sector pulled the IWM down. And basically this is the reason why we fell through 228.08 support, but we bounced off of the 38.2% fib level at 224.09. Okay, so that's still a very bullish sign. Like this is a bull flag. We fell, obviously, but now let's see if we can consolidate above this support level here, while this MACD is extremely oversold, which means that, there's potential room to the upside. So if we can find support here, while the MACD is oversold, that can potentially mean that we can eventually go on higher on the IWM. Okay, so that's really important to keep your eyes on. 224 is the important level that needs to hold for IWM. The next level of resistance is 228. Okay, so just keep your eyes on those levels. The dollar we went over already. The US 10-year yield, obviously people don't want to have any safe investments and only receive 1.5% on their investment if they can just invest in the Nasdaq and get 1.2% in a day as opposed to 1.5% in a year. So that's why the 10-year yield went lower. So yeah, that's basically it for the 10-year yield. Crude oil had a ridiculous move as well because it broke out of the rising wedge and then it ended up about facing and it broke down to the lower side of the rising wedge all within 2 days. So that's not too good for crude oil in the short term. So obviously it looks like this is going to be a profit taking move. Let's see if, these levels of support, etc., hold for crude oil. But for now, I mean, we've just been skyrocketing in such a ridiculous way. It makes sense why there's going to be profit taking, especially because of the strong dollar. So yeah, that's why we see crude oil tanking and these other commodities tanking as well. And you can also see that copper took a huge dive today as well, obviously because of the anti-inflationary movement in the market and the strong dollar. So yeah, that's really it for the commodities and the stock market. Now let's go ahead and look at Bitcoin. So Bitcoin obviously did not do well either today because of the strong dollar and because, inflation currently isn't a huge deal. So when inflation is not a huge deal, Bitcoin as an anti-inflationary measure is not going to do as well because if the market in general is not worried about inflation as much, Bitcoin doesn't really have that huge of a reason to continue going up, especially when the dollar goes up like this. So when the dollar is usually very, very strong, Bitcoin goes lower. Usually when the dollar is very strong, the stock market in general is supposed to go lower. But because it came at a time when inflation was a huge concern, the tech sector pulled the stock market up, but the strong dollar caused the crypto market to fall. Okay, so obviously, we were talking about this $41,370 level, which is the 38.2% fib. That is still the key level of resistance that Bitcoin needs to cross above. But now we're approaching a very key level of support. It's one of the 3 key levels of support on Bitcoin, which is the 23.6% fib level at 37,000. 37,000 needs to hold as support. If that level doesn't hold, then this trend line needs to hold. And if that trend line doesn't hold, then this trend line needs to hold. So essentially, 34,500 to 35,600 is a very, very strong, important level of support that needs to hold for Bitcoin if 37,000 breaks. All right. So obviously, because Bitcoin is down and the dollar is strong, Ethereum broke down below the levels of support that was holding. The 23.6% fib level, it's trading below it currently at, that level of support was 23.48. So we're trading right below it at 23.35. All right, so the level of support that needs to hold is 23.18. So we're sitting right at that level, right at this lower trend line right here, right? 23.18. 23.18 needs to hold for Ethereum, or things can look very bad. But it already doesn't look great because of the strong dollar move. But yeah, just be careful. We're approaching 23.18, and if that doesn't hold, I will, I think, yeah, either wait for, you know, it to create like some sort of a support to buy into it a bit more, or you sell and rebuy if it crosses back above. All right, that's what I, you know, told people to do. I took profits when Bitcoin was trading, you know, up here a few days ago and over here a few weeks ago. So I did buy back here and then I sold them again, and you know, I've just been trading, but I'm not really holding as much long term because I'm waiting for a break above 41.3 or a break down below 30 for like a buy in the 20s for Bitcoin. But yeah, I mean, that's longer term. Otherwise, like trading wise, it's not the you could just trade them, but that's what I've been doing for Bitcoin and Ethereum. Okay. So yeah, there's levels for Ethereum. Just don't hold when you can take it. Like if you're down if you're down like 300 for example, right? Don't just mindlessly hold and be like, "Oh yeah, no, it's a long-term investment, blah blah blah. I'm just going to hold longer term." $300 loss will end up turning into $1,000 loss for no reason when you can just sell and rebuy back later. Yeah, I would. That's basically what I would do. I'm not your financial advisor. This isn't financial advice though. All right, now let's go into all of the stocks you guys wanted me to do technical analysis on. This is FCell. FCell looks very, very, very interesting. So here's what we can do with FCell. So the 61.8% fib level at 879 needs to hold as support. All right, that would be a best case scenario for FCell if that level of support holds, and then we ended up breaking out of this falling wedge, which is a bullish pattern. We can break up. Sorry, we can break up to the upside for like a day or two, and that would be a really nice swing. So what might end up happening is FCell might end up breaking down and touching this lower trend line. So what you can do is you can buy at that level when it touches, and then have a tight stop below trend line. Okay. So yeah, essentially this is a falling wedge. FCell looks pretty good. The MACD is oversold. We're oversold at support in a bullish pattern. FCell looks pretty good. But yeah, these levels need to hold either 879 or this lower trend line. So just be careful and take that into consideration. If it breaks to the upside and these levels of support hold, we can go back up to $10 or $11 because this is a huge like bullish pattern if this level of support really sustains itself. So yeah, FCell looks really, really good. So HBAR is in an interesting spot. The level of resistance is going to be around 24 cents, but the level of support is going to be around 17 cents. So if you were to buy right now, you'd be risking 4 cents in exchange for 3 cents. So that's not a great risk reward trade. So what you would rather want to do is buy it if it crosses down below 20 cents again. 20, 19 cents, if you could buy it below those levels, closer to this lower trend line here, that would be a much better buy. Because also the MACD line is overbought. So with the MACD line being overbought, that means that there's still more potential room to the downside, especially also because the dollar is strong and Bitcoin took a hit. So obviously if Bitcoin and Ethereum are not going up and the dollar is going up, it doesn't look that great for, you know, altcoins, especially because I mean, like, especially because specifically for this one as well, the MACD is overbought. So yeah, just be careful on HBAR. All right, CCXI. I mean, this used to be like a penny stock. Probably got reverse split so many times. I'm not sure. I mean, it might be a penny. I remember trading this. Yes. Yeah. Okay. Yep. So yeah. So basically, the resistance is obviously this gap to be filled, which is 1720, right? So that would be the upside target that everyone's looking at. But the issue is that CCXI would have been a much better buy at the lows here. And then you could have just bought and had like a tight stop below it. But now with a move already happening, while the technicals aren't even showing much, technicals show like overbought, right? But were moving upward, and we had a huge, ridiculous move downward. So, um, basically, what you'd have to do is you would have to trade the momentum. So the only way to do that is if you were to buy at a good price point, have a stop loss below it a bit, and your target would be 1720. So what you could do is I would try to buy as close to $12 as possible. As, weird as it seems, because you're like, it's already trading at 1350. Why not, try to buy it around 13 or 1275, etc. You could, but you would get a much, much better risk reward trade at a lower price, because especially for these stocks, they want to, people want to take profits. So just be patient, in my opinion, and just wait for that, unless you want to trade the momentum upward. Day trading, that's completely different. But yeah, so once it does come back to 12, what's probably going to end up happening is people are going to try to make it go back down to 1174 to fill this lower gap. All right, so I would be careful about that. For CCXI, that's where I would try to be buying. I wouldn't want to buy up here. All right, ZOM. Oh, man. ZOM needs to hold the 70-86% level, or 786 Fibonacci level, which is 81.8. We can see that it's forming a bull flag a bit, and this is like a triangle that's being formed here as well. It's holding the 20 exponential moving average beautifully, which is a very good sign. The MACD is oversold, which is also a very good sign, which means that it has potential room to the upside. So if we can consolidate above 88 cents, or if we do fall and then start consolidating above 81 cents, or 82 cents, sorry, then we can break above and, start trading at, we can end up touching 110, 115 cents again if these levels hold. But currently, it's not the best risk reward trade because the support is down at 82 cents. So if you were to buy here, you'd be risking 8 cents in exchange to gain, say, for example, you wanted your target to be up here at 115, for example. All right, right here at around 114. Cool. So that's 24 cents away, but your support is approximately 8 cents away. So you would only get like a 3-to-1 risk reward. How much better would it be if you could try to get it closer to 82 cents with an upward target of $1.15, right? So you would have a much better risk reward to risk ratio. So yeah, that's what I would be looking for. I wouldn't want to buy all in currently. They can easily just bring down the market, and you would wish you had extra money to buy at a lower, cheaper price. But yeah, currently it's holding above, what is this, 88 cents. It needs to continue holding 88 cents, but in case it doesn't, have more money to buy closer to 80, 81, 82 cents. But yeah, that's my analysis for ZOM. All right, WPG. I've never traded this stock before, but we can see that it's oversold on the MACD, but the RSI is pointed lower. We're trading above support, which is important. So the level that it needs to hold is 180, right? So obviously we're not really close to it, but we're falling. I don't know what the news is for the company, but we're trading literally at support. So this level of support really needs to hold. The 245, 250 area needs to hold on WPG. If it doesn't, then it can just continue going lower to the 220 area, and then $2 and then $1.80. So yeah, I mean, there's no real reason why it looks like it can do well or bullish. Like, this isn't a bullish setup. This was a bullish setup right here. It skyrocketed up, created a bull flag. It broke up to the upside, and it only lasted a day, and it gave up all of its gain. So I would be very careful with that WPG. HIPA, still very, very bullish. This is a bullish structure similar to WPG. It was, see, like, it created a flag, right? HIPA, it's creating a flag. It reclaimed this lower trend line, which is pretty insane. HIPA is very, very bullish. similar to the tech sector, how the MACD crossed below. People looks like it's about to cross below, but the setup is bullish. So that is a very, very bullish setup. People looks very, very nice. 211 needs to hold. 211 holds, and this pattern plays out. We can end up trading all the way back up here, and we can fill this gap all the way at 270. So that is a pretty good risk reward trade. And the setup is bullish as well. Things look pretty interesting for HEPA. RGLS. Yeah, man. So similar. This isn't a great setup because this looks very, very bearish. Like there's no sign of it consolidating. Like it just keeps on making new lows for the past few days. It's just made new lows, new lows, new lows. So it needs to consolidate, find some sort of support above 85 cents. And then obviously the closest, most important level of support is 81.5 cents. So 85 cents and then 81.5 are the key levels of support for RGLS. Other than that, we need to start consolidating somewhere. It needs to find support. That's basically it. The MACD is oversold, and it's just begging for a setup. It needs to consolidate above 85 or 81.5 cents, and then it could, start going back higher. But for now, there's no reason to buy it. You gotta wait for the setup. Be patient. So NCLH. All right, NCLH. I made so much money on Carnival Cruise and NCLH, all of these different stocks. But yeah, so right now 38.2% fib level at 30.73 is acting as really nice support. We can see that it tested a few times and it held. So 30.73 needs to hold as support. The MACD is also oversold. The RSI is pointed downward, right? But if we are oversold on the MACD at support, let's see if this can hold. If this can hold, then, we can end up retesting the resistance at 31.97 and then end up, potentially trading back up at 34. But yeah, in the short term, 30.73 needs to hold. We're oversold on the MACD. For now, we just need to consolidate and hold 30.73. That's really it on NCLH. If that doesn't hold, then 29.73 is going to be the next level of support on NCLH. Nikola, obviously, this is a very, very strong move as well. The MACD is very oversold, which means that there's a lot more room to go, right? Oh, the RSI just moved up as well. This is a bull flag being formed with a very strong day. And overall, Nikola just looks very, very, very strong. The levels that would need to hold as support are going to be this level here at 1621. If 1621 can hold and we complete this bull flag that's being formed here, we can end up seeing a retest back up to all the way to 22 or $23. So that would be pretty interesting on Nikola. It's all set up for that move. So now it's just a matter of it holding that level of support and breaking through the resistance levels. But yeah, Nikola looks really nice. Yeah, looks great, to be honest. So AMP, obviously it's a financial company. The financial sector took a hit today. Obviously similar to XLF and the IWM. AMP took a hit because interest rate scares aren't relevant currently. And that's why the dollar showed strength, and that's why the tech sector showed strength, and that's why the financial sector showed weakness, because interest rate scares aren't relevant. So right now, I wouldn't be looking at specific, financial sector stocks currently. I would key off of, what I would do is I would key off of the IWM, and I would watch to see if the IWM can hold the 38.2% fib level at 224. If the IWM can hold at 224, because currently it still needs to retest and see if it can retest this long wick here. So if the IWM holds 224, then it would be a much better sign for AMP. But yeah, it had a huge red day. Yeah, I just we need to see if it can reclaim 247.50 first. And if it can reclaim 247.50 and, you know, find support above that, then I would look at AMC to the long side for calls. PNG, this is in my opinion, it's a very like bad illiquid penny stock. Like there's much better stocks to be trading, like that are much more volatile and give like profits every day usually. But like look, it's barely moved for the past few weeks. It moved like within a 10-cent range. So I don't think this is worth, watching. PLTR, obviously a huge, very strong day. Very bullish handle structure pattern here. This is a bull flag, very strong. The MACD is oversold, which means that there's a lot more room to the upside. The RSI still isn't overbought, which means that there's still a lot more room to the upside as well. The level that obviously needs to break is the high from Monday, which is 25.55. And the level that we need to hold to remain like short-term bullish is going to be 23.86. So 23.86 needs to hold and 25.55 needs to break. But overall, it looks very bullish. PLTR looks great. All right, here's CTXR on a weekly chart. Obviously, it's been going crazy this week. The next level of resistance is really at $4, right? There's nothing really in between. It's just a bunch of choppy price action. The next key resistance is $4, and the key support is approximately here and here, really at 315. All right, so now let's look back on a daily chart. Can't really, swing this. Like, obviously, you have to wait for it to either come back to these levels of support or trade the momentum intraday. This was a very bullish pattern, bullish structure right here. You can see a bull flag right here. Right there, we created a bull flag. Let me just draw it out for you guys. Boom, 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 right? And then we ended up breaking out above, and we just, yeah, it's crazy. CTXR had a huge day. Let's see if it can retest $4 and see what happens from there. All right, CCIV, it looks like it's also creating a bull flag. This level of support needs to hold. This lower trend line essentially really needs to hold. We can see that it's retesting the upper level of this trend line, which is acting as resistance. So tomorrow, the level of resistance that needs to break is going to be approximately 2380. All right, if 2380 breaks, we can see an upward move all the way to potentially 2550 and onward, and then, a bit of a pullback. But this is a bullish structure. The MACD is oversold, and the real levels of support are going to be the 20 exponential moving average, and then back here, this lower trend line level at around 2150. All right, so let's just keep an eye on that. For CCIV, overall looks very bullish. The MACD is oversold, which means that it can potentially go on to the upside, and break above. So let's see what happens. Bingo looks very bullish. It's curling upward. This is also a bull flag. Price action is curling upward, right? It looks like we had a really nice few days. We reversed from a strong red day, right? But then we basically reclaimed everything. So now we need to see if we can continue on higher to see if this is actually a bull flag, right? The MACD is oversold. So we're oversold on the MACD, closing in on resistance in a bullish structure. So bingo looks pretty good to the upside. Yeah, just be careful. And yeah, the level of support that we need to hold is around 740. And yeah, that's basically it. The level of resistance would end up being, if we continue on higher, level of resistance would be past $9, because this would end up breaking and we would end up trading much higher. But yeah, bingo looks like it has a lot of steam to the upside, potentially. GVO looks like we need to hold and hold above this level a bit longer at 763. It needs to hold as support. So let's see if we can consolidate a bit longer. The MACD is oversold, so that is a bullish signal. We did have a bit of a red day today, but we're holding the 20 exponential moving average at 787, and we bounced off of that perfectly. Yeah, so that's really it. Givo just needs to see if we can consolidate above 763. This is a bullish structure as well. So if this bullish structure remains, we find support, we can easily break up to the upside. So yeah, Givo looks overall pretty bullish as well. It just needs to hold 763. And yeah, that's basically it for today's video. I hope you guys enjoyed it and have an amazing day. I'll see you guys tomorrow.